Hello guys, welcome back to another Lumley trading video. In this one we're going to be looking at Motorsport Games, which is ticker MSGM. Now today, one of the leading, is the leading gapper and up a massive 700% just today alone. And today was actually one of those kind of key ones to be paying attention to, because this is one of the few times where day trading these standard deviations actually wouldn't have worked all that well. And it's how to know not to use them on some days and when to start using them, as well as giving us our levels obviously looking forward. So to quickly note the deviations that we've gone through today and have broken through, what would we be paying attention to? So as we can see, obviously quite stable all throughout the day. Well, it is still moving from about $4 to around $7 by the open, so still moved about 100%, but it's when you start getting these massive momentum. So obviously all through here we'd probably be quite likely to be looking at the deviation. So again, probably would have been looking at the $9 short, may potentially have made money on that, considering it did pull back 40%. So that is, in a percentage terms, still a pretty good trade. I mean, you're still up maybe 4%, so maybe you would have at least moved your stock to break even. But either way, let's say that was a loss. Obviously next momentum pop, these were potential losses. Again, it's all down to what is your reason or how you enter. If you just enter blindly at the level, then yes, those were most likely losses. If you have some sort of an entry criteria, so usually one of the things I look for is, even if we're just looking on the 1 minute, usually a 1 minute pullback. And if we go into the 1 minute, was there any pullbacks coming into these levels? We can see on this one there was. So again, that's why I talked about this one, because that was definitely a potential trade. Probably one, if I was watching the stock, would have traded. Coming into the next one, so there was no 1 minute pullback, was no red candle. So to me, again, you're just taking on a lot of risk, and for the sake of maybe losing out on say on a trade like this, maybe 10 cents or 5 or 10 cents, I would much rather just wait for that kind of added confirmation instead of getting the stop outs. Now this is where we would have stopped trading no matter what on this stock. So let's say this was a loss, just if it was, and this was a loss as well. Obviously we stopped out anyway by here because that's up a massive amount, but once we came to 33, it did halt and then resumed at 38. Really, as soon as I see this, if it continues that upward momentum, or really right away, I tend to just stay away from trading the stock. And the reason for that is, especially if we're trading these short, unless you are hedging with options, which on this again there is none, I would never be holding something like this short, because again, I never want to be stuck in a halt, because again, that's just so much risk that is kind of unmanageable. If you're in a halt, there is nothing you can do. If it spikes up 100% or when it resumes, there is nothing you can do. You are down that amount. And that's why once you see these halts, it is a lot riskier to trade, and usually something I will stay out of anyway. But so again, from here, wouldn't have probably taken any short trades, and we can see as soon as we hit that next deviation, it halted and then resumed and kind of pull back to that level, confirmed it, and push straight up. So this is kind of how you can use them in a long bias manner. Okay, we don't get these stocks all the time, but when we do this, how you can kind of catch the momentum, and really that's when I'd be looking more for it. The open, if it's opening above the previous halt, it's right next to that deviation. If it gets any sign of that pullback, even there, hitting in, a good chance that you can catch the momentum. But again, there's a lot of risk on that. Get something to get used to. Probably not something you want to be trading, but probably more observing if you're newer. But this again is kind of what we're waiting for, and this is why I always look for that kind of sort of confirmation. Is obviously we push up all the way then to this third deviation. So again, if we're back to the longer term charts, we can see that's our third deviation on the 1 year. We know this is usually the peak. Again, the 1 year is always going to be stronger than the 6 months, just because it contains more data. And in this case, they're very far apart. So again, when you're seeing that as well, there's definitely always more weight on the 1 year, so always be paying attention to that more strong. But obviously, it just may mean you use more size. It doesn't mean you're not going to trade the other side. But what that really kind of shows us is, as we always say, the third and fourth, or really the third, is always going to be the key one. And the reason for that is 99.7% of the data should trade within, and you just tend to see a lot of algorithms and stuff trigger at that level. So if you're pushing up that level, that's when we expect that pullback. And that's really what happened here. Again, probably wouldn't have got that pinpoint accuracy, just considering how much it's halted. It would have just been taking a lot of risk. And there definitely would have been a potential halt if it carried on this move, because don't forget, you're up 50% in 3 minutes. And obviously when you see that, actually that's coming out of the halt and then it carried on again. But again, this is definitely could be another circuit breaker. So it's just trading these short would have just been very risky. And instead it's waiting for the stock to kind of cool down a bit. And how did we get that? Obviously it pulled back. There could have been a reason for entry once you kind of broke that low. But again, definitely would have been a trading opportunity there if it was more of a scalp, but this one just looked like it was quite a tricky trade today. Probably would have been a loser if I was to trade it, but again, I don't really trade these kind of stocks anymore. I focus more on the options and on the longer term stocks. But either way, we came back, started to pull back. If we kind of saw this retest, we can see, obviously, if we're looking at volume, don't actually have it on right now, but we can add it on real quick. But you'll be able to see that volume is definitely dying out. Yeah, quite clear. Volume is dying out by here. We've got that retest. And again, all you kind of have to see is that rejection came into this level, instantly kind of failed. Even if we got in an entry around this breakdown, the $23, again, even if you had a stop at that high, which, I mean, I wouldn't, it's a 20% stop, that's crazy. But you can see if you did even have maybe, you know, $1 stop or something like that, you were still looking at about 20% upside on a trade like that. So again, it's all how can you manage these trades. Sometimes there is going to be losers, and this one was potentially quite a high loser, but it's all looking at the momentum. If you go over to the news, there was probably some big news on this. Yeah, NASDAQ compliance. So it's always looking into these as well. If it's moving on big news, again, always you want to be more concerned. If once you see a halt as well, usually it'll be something I stop trading until you start to see a stock kind of get weaker volume. And the reason for that is, again, just you don't want to be caught in any of these, and that's why if you're watching the volume today, okay, this trade, potential win, potential loss, depending where your stops and targets are. From here, that would have been our first loss, depending on your entry. If you waited for that red candle, that wouldn't have been a loss. But if you did, again, so probably one winner, one loser, you come into this level, we had that first halt again until volume dies out, not something I'm looking to trade. You can see we came into this level, volume's really kind of dead after about 11. So, did that a lot wrong, but around here volume's definitely died out. So once we kind of get an entry criteria after here, that would be the entry we'll be looking at. And again, it was just kind of did that retest, most likely going to fail on this level once again, and that's what we're looking for. So definitely ways to trade it. These are the ones to really be observing, because these can make a lot of money. Obviously you're risking a lot of money, but these are the ones that make the even bigger move. So if you can trade these well, there's definitely money to be made. But what are we looking at then going forward on a longer term level? Really, we only have one resistance, and that's at $36.33, and obviously we've already touched this level, but if we retest it, the $27. So these are two resistances. If we push up to these, again, potential shorts, but considering how it reacted today, there's definitely, you know, be a bit more cautious trading it. Probably going to be very hard to borrow, so don't even know how easy it will be to short trade. So more it's how can we catch the long bounces on this, and that's probably what I'd be paying more attention to, and that could be at 17.75. We also have some at 8.50. We can just mark them all down here, and again, these are just going to be all our support. So any of these levels, as the first time we come into these on the way down, which will probably end up being tomorrow or at least this week, these are where we're looking really for the bounces. And you can kind of see intraday we kind of came back to this. They did bounce a bit early, you know, missed by about 20 or so cents, so potentially missed those. But either way, you've got those bounces, especially here you've got that kind of double bottom or kind of double bounce area, so definitely something could have been looking at. And even after hours now, we've actually hit the level, we're getting a bit of a bounce. And again, I mean, that on a percentage terms isn't too bad. It did bounce a nice, you know, 3.5%. Kind of right away, but really this level kind of being hit after hours, depending on how we open. Probably won't be paying too much attention to that. It's going to be once we come back down to these lower levels, once we come into these again the first time, just quite a tight stop considering how this stock's reacted today. So, you know, maybe a 10 to 20 cent stop, and then just looking for a bounce of, you know, a point or so on these, get away at a 1 to 5 risk to reward. And again, they could be quite easy setups just depending on it. And again, then we don't need to worry about it being a hard to borrow, because obviously they're going to be long bias trades. So again, looking at that on around $11 as well, 9.15, 8.50 and 7.30. So that's really what I'm looking at on MSGM going forward. If you enjoyed the video, why not drop a like and subscribe and check out this analysis video.